Happy Friday, traders. You'll have to excuse my voice this morning. It's breaking up. It's been a long week, a lot going on, and woke up this morning with this rough throat. Uh, thanks for joining me this Friday. This is episode number 1595. Do I sound like Barry White for those older folks in here? Um, As I said, this is Trader Byte number 1595. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a slight risk on sentiment across the indices. The cable this morning experienced a pop. The British pound is trading at 124, 125 even almost. Crude has climbed up a bit, but only 40 basis points, and the Russell is up 5.8 points or 0.37%. The bonds are off a whole handle in 4 ticks. The bonds are way off. The Bund is also off an entire handle in 8 ticks. It seems like sentiment is for risk, slightly risk on, but nothing very aggressive. The S&P is only 14 points or so away from the all-time high. The all-time high in the futures on a back-adjusted basis. Remember, I'm quoting December, okay? So what I'm mentioning in terms of futures is pretty much everything is December across the board except for crude oil, which is October. Um, the all-time high is 3,031 and a quarter. So if you want to check to see if your back-adjusted data, if you rolled today or yesterday, um, you might verify to see if your all-time high is at 3,031 and a quarter on your charts. If it's not, then something's up with your roll, with your back-adjusted continuous contract. Anyway, so that's where we are. Gold is unchanged at 1,507, and that's where we stand. The news theme today. There was some news out of China, Chinese paper. The editor in chief, who seems to act. It's funny. It's China Global Times editor in chief, but the market responds to this person's comments as if he is the government spokesman on trade. Um, you know, you would think a newspaper would be completely separate and would not be representing the government, but that's how it rolls. Um, the theme today is optimism continues to bubble on U.S.-China trade talks ahead of upcoming mid-level negotiation in Washington. China said to make more exemptions to its tariff list. Chinese companies are being encouraged by the Chinese government to buy certain amounts of U.S. farm products, including soybeans, pork, which will be exempted from additional tariffs. So we saw a little pop on that overnight. Pop on that overnight, and that's it. Northern ECB members said to have pushed back on Draghi's QE resumption. And other than that, there's really not all that much. I want to remind everyone that official rollover happened yesterday on U.S. indices. We're trading December. These are the rollover premiums. Remember, the rollover is supposed to go settlement to settlement. The proper way to do a rollover is settlement to settlement. I found out actually last night in a discussion in Convergent Trading's forums that Sierra does it open to open, which in my opinion is incorrect. If you look at any other platform and you look at the proper thing to do, it should be on settlement. Settlement is the official marked price for a product. In any case, these are the factors. Everything I'm quoting today is going to be based on December contracts. Looking at the calendar, we did get retail sales. We see a little pop in retail sales in the U.S., 0.4% versus 0.2, and then Michigan sentiment prelim, which can be a mover, comes out a half hour after the open. Again, you'll have to excuse my voice. I'm likely losing my voice here um, into the weekend. Glad it's the weekend. But the expectation on Michigan sentiment is 90.9. And then we get business inventories at the same time, 0.3% prior zero. Net business inventories is not likely to move as much. And that's what we have that's scheduled for the day. 10 o'clock Eastern, and then we are done for the weekend. Sunday night, we do get Sunday night at 10 p.m. Eastern, 9 Central, we get retail sales out of China, industrial production out of China, and fixed asset investment out of China as well, for those who will be trading in the evening. Let's take a look at what was expected yesterday versus what we got. So yesterday we were opening in a gap around 3012. The high of the prior day is 3004. Primary expectation, as you can see in the green here. And by the way, holy cow, did I get a lot of DMs and comments on Twitter, and I got quite a few emails and private messages within Convergence chat community about not doing scenarios. It's a pretty serious. Seems like it was a pretty serious transgression against everybody who's been following along. The reason I wanted to make the change is to make things to create less noise and to just focus on the areas where the market is expected to have a reaction rather than charting what I think is the expected um, auction and price discovery path, which I call scenarios. Used to call them hypos, and then other people started calling them hypos that also do videos in the morning after I started doing mine. So I changed them to scenarios, not to confuse mine with theirs. But here we have the green is the primary scenario. This is the most likely play. And we're expecting an open auction, and then we're expecting responsive selling into the prior day, with the low being challenged. And then I was expecting it to push higher into 3016. That's the primary scenario. Let's take a look at what the market did. So if we scroll back, there was a lot of action yesterday, a lot of bars. If we scroll back, you'll see that actually, I should do one of these quick 5-minute walkthroughs one of these days. You can see that we have a very clean opening swing. Um, this is not an opening range trade. I don't do an opening range trade. I don't believe a time factor is something important other than for the IB. Um, we have an opening swing, so we come down. We have this clean test into 3,975. We open at 3,011. The trader bite had it at 3012. A lot can happen in 15 minutes. And then it pushes up to 3,015.50, which is actually a stock zone, which was slightly higher. And then we get this reattempt and then a drop. So now we've got the open auction because there's no drive here. You see how it is. Down, up, down. That's an open auction. That means the market is auctioning on both sides. And what an open auction tells us, for those who, donated to my charity for the webinar series a while back, you know that an open auction helps us discover that the time frame that is likely in control is short to intermediate because there's no drive. There's no driver. There's no push. There's nobody coming in here and revaluing the ES into another area. And so that informs us that we might stay in bounds. We're likely to be in bounds. We might want to trade from the outside in. It also informs us that we need to lay off of market generated levels in the middle, things like the mid, trading off a mid or VWAP and things like that, because we're crisscrossing the opening swing, and to essentially expect that the market is going to balance and the market might break out at some point. Um, So that's what I was looking at, and then the market drops, and here we get the perfect drop into yesterday's close. Um, Yesterday's close, and so here's what that looked like on my thing. There it is. There's an open auction right there, and then a reversion back to yesterday's close area, which is right here, and then we launch upwards from there. That was what was expected, and that's basically what we got, right? So we push down, open auction, push down, and we launch up. Where do we go? Where did we expect to go? Yesterday, my expectation was actually kind of conservative, 30.16 and a quarter, and it managed to get right up there to 21.50. This is why I draw these scenarios. It's not that I can predict the market, but the market behaves a certain way given the narrative that's in front of it, and that's the point I'm making this morning. Is that we don't predict, but we can create a plan for what to do when the market does whatever it does. Later on, we had almost scenario two. Then we had basically scenario one play again. We test we test the close again. News took us up. News brought us down, and then it pushed back up right to the area from before. Slight range extension up and back right to the middle. And we finish in the middle. And notice yesterday's profile. The rest of yesterday's profile. For those of you who've been around a while, what does that profile say? That profile says that the market has pushed out of this balance area that we've been in since in most of August. Then we created a 2-day balance at the beginning of September. Then we broke higher. And as we are breaking higher, we're running into another balance area near the top of the all-time high, near the top of the range. And the market is having this price discovery process across the entire range. There is no balance here. There's no consensus. There's a disagreement on what price should be. Oh my God, my throat's burning. Uh, there's disagreement on where price should be. So this would be your standard Gaussian or normal distribution statistically. What we have is the market agreeing to price up here. Then it's saying, nah, I'll agree to price here. And then, nah, I'll agree to price here for a bit. Actually, this is number one. This is number two. This is number three. And then number four as well. As you see it moving from area to area to area. Why am I going through all this? There's an important thing going on here. These distribution areas need to be in the corner. Well, I can't tell you what to say. I'll say for me, need to be in the corner of my eyes as the market transitions from one distribution to the next. That'll inform me as to what the next target is. The way this works is once we cross a low volume node, we're likely to go to the high volume price of the next node. And then once we cross back, we're likely to go to the high volume price of the next node and the next node and the next node. Um, that's so I'm going to keep this profile in view while I'm trading. It's going to be important today because there is a lot of price discovery yesterday and the market's not finding consensus. So as we're trading up here at 3017 currently, the point of control, which by the way is on top, the overnight point of control is on top of yesterday's point of control. The point of control becomes important. If the point of control becomes something that shuts off the buying, then I expect it to test the low volume node. Then I expect it to test the high volume price below, bounce back up probably to the low volume node. Then if it cannot find buyers, and I don't know if it will, move to the next low volume node, move to the next price, and so on. This is the sequence of the auction. Very important auction lesson there. If I lost you, it's okay. We'll talk about it again. But that's what we got yesterday. We got pretty much scenario one on the nose. It did extend up farther than I expected, but that's what we have. Here yesterday, we finished. Where do we test first thing? Even overnight, we test the low volume node down below. So whenever you have a profile with a double distribution, a multi-prong, like a tri-distribution, whatever, it gives us this nice, clean, clear view of where prices were accepted, where the necklines are, and the necklines are there, and you could see how the market behaved there. It opened and it started to build basically overnight a distribution here. Then it moves up. What does it do? It moves up into the point of control area right there. It tests the extreme right there and then extends up, but then it comes back. What does it come back to? It comes back to the neckline from before, and it builds a point of control right on top of the point of control of yesterday. It's so what do we infer from that? We infer that the auction is quite orderly. Currently, it's quite logical or orderly, and we also infer that we're likely to have a shorter time frame trader in effect. One thing I want to say though, yes, I had a lot of confidence. The day before, I had a lot of confidence. I talked about this yesterday. The day before, I had a lot of confidence based on a narrative that we would go into balance, and that didn't work. There is that caveat. The market, I'm always open to the market. The market can do whatever it wants, but I have to come in with some sort of a plan. Okay, traffic is going to do what traffic does, but I have to plan out my route to my destination, and I'm open to being diverted. I'm open to being wrong. I'm open to having to turn around and go back. It's okay. But I'm not going to leave the house without knowing where I'm likely to go and how I'm likely to get there. And that's the whole point behind this subject of scenarios. So that's the play of yesterday. Today, I'm expecting a lot more volume in the December contract. Really, today, you should be trading December. There is no excuse to stay in September. If you're one of these people that likes to stick with a contract that they're on and because you memorize the levels or whatever, that's okay. But you should be out of there by Wednesday morning latest next week. Okay. So let's get into what's expected for today. I've talked a lot. I've made this a long trader bite. I apologize. Trying to keep these to 15 minutes, and I've been very unsuccessful lately. First, we want to take a moment. It is like Friday. Take a moment to hit the like button, please. It helps people find the channel, and it just helps expose what I'm doing. I do have a vision and a mission that I've been working on, and everything I've built since I came online and saw what was available to online traders and how much of it was, frankly, just nonsense to me. I've had this vision to just make a difference, and so your hitting the like button helps people find the channel if they're looking for futures or whatever. Here we are. So we are opening. This is not really value because there's a lot of price discovery, but we're opening in range. You can say we're opening in value, but this is just mathematical value. It doesn't really mean anything because the profile is not anywhere near a normal distribution. The expectation is for an open auction when we open in value. I didn't see anything overnight that's going to compel me to believe that there's likely to be a drive as we open, but I'm expecting an open auction. I expect it to test the extremes of yesterday. I expect it to test down as well. And then I expect mostly a market that's in the middle that then is likely to push higher. We have a huge magnet up here with the all-time high, 30.31 and a quarter. And if you go back in time, if we go back to the past of when we were here last, there was a huge balance day. Look at this balance day here after we made the high. We made the high right up here on July 28th, I think, 26th. And then we had this huge balance day, and we're kind of tangled up in this area. We're trading 30.17. That naked point of control and naked close is at 30.23, and we have a double distribution profile. So we're referring back in time to see how we traded while we were up here to figure out where we are now. So an open auction that is likely to test up, test down, come back up, and then find its way to start making its way up to all-time highs. It might stall at the overnight high. Notice that the overnight high is right on top of the stock zone here. That's scenario one. It's within earshot, and the overall trend has been higher and higher and higher and higher. Okay. So there's no reason, in other words, the easier flow is to the upside, but because we are in balance, I'm expecting it to stay in balance this morning. Expecting a slow day, to be honest with you. Secondary, the secondary is an open test up, potential impulse down and a drive down, takes out the overnight low and retests this double tests at the low from yesterday to bring us back into the range of 2 days ago, the rally day, and potentially down into 3,029.98 before we bounce back up. And this would be what we would call in auction markets a check. It'll be a check type of situation where we would go and see if there's any selling interest below for real, for sure, below the millennial figure of 3,000. If there isn't, we would have the next day, or maybe even in the session, who knows, we may have a very strong push into new all-time highs once we check. This occurs for many reasons. It's not like the market's driven by one person and it's just like, hey, let's go check. It's just that people take profits, cover positions, cover spreads, whatever, and it ends up driving prices down. But then buyers step in as they see that these are advantageous prices and they can pick up, 30 points to the high from the low, and that compels them to jump in and take that risk on a swing basis. That's where we are. I've gone way over. I hope you all have a fantastic weekend. Convergent members, those of you who weren't at the member study hall yesterday, I really would urge you to watch that video. It's about how we use Trade the News, which is included with your membership, how to use it effectively to figure out what the theme of the day is, and know what to listen to when these tweets and so on come out. Good luck.